So we haven't had this conversation in a while. In fact, it may have been more than a year or so, but I think we really have to have a serious discussion about whether Jerome Powell will go down in the history books as either Arthur Burns or he will go down as someone who beat inflation. And I'm drawing a blank on the guy's name. How can that happen to me so early in the morning? Arthur Burns or Paul Volcker. How could I miss Paul Volcker? Man, it must be early. Anyways, Jerome Powell. Will he be Arthur Burns or Paul Volcker? So again, I think we need to talk about a couple of things. First and foremost, the Fed is in what is called a quiet period. That means they don't talk to the press. But if anybody doesn't understand how this works, Nick Timiraos from the Wall Street Journal has clearly got an inside track to Jerome Powell. And in the Wall Street Journal, they just published an article talking about Jerome Powell struggling. He is struggling to find the right target for the monetary policy. Apparently, since September, the job market is looking firmer than he expected. Inflation is stickier and heading in the wrong direction. In fact, many of the colleagues, right, the other 18 Fed presidents, are having some misgivings. Some of the Fed presidents who strongly supported the first two rate cuts in 50 and 25 are, frankly, a lot less supportive. However, he has a problem. He did not communicate to the market that a pause was coming on Wednesday. According to Nick Timiraos, the best course of action as to not shock the market will be to go through with the rate cut and then use the podium, use the statement of projections, SOP, to be hawkish, to basically clearly paint a vision that the Fed is going on a pausing mission. Well, Jerome Powell, you do have a choice. You can pause. Again, I have said for many weeks now, the Fed will cut, but the Fed should pause, right? Hopefully that has come through loud and clear. Again, a pause will be unexpected. It will cause the market to react. It would frankly probably cause mortgage rates to go up. If you haven't paid attention, again, the bond market moves with these expectations. And the last one I saw was a 97 or 98% chance of a cut on Wednesday. But Jerome Powell, you are playing with your legacy. This stuff is hard. Nobody is pretending it is not hard. But when you are facing the crossroads and there is a pause or a cut, we have a new administration coming in, which many would argue would at least initially be inflationary. I don't know what you're doing, brother, but a pause looks like the right call. It looks like the smart call. It looks like the safe call. Again, if it's not, you can cut in February or January or whenever the next meeting is. It might be late January. So it's not like you're 6 months away and you can't cut at the next meeting. I think you all made a mistake not clearly articulating, or at least having some of your minions go out and talk about, hey, you know what? A pause is possible. Once you get the projections over 75 or 80%, the Fed's doing that. At least this Fed is doing this. Jerome Powell clearly does not want to surprise the market. So I do think Jerome Powell he is really threatening becoming Arthur Burns. And, as the guy who is trying to remove the stain of transitory, remember that nonsense, transitory? This would be kind of a double gut punch. And I don't think he wants it. And I think they need to be big boys and girls and, admit they're wrong and say, hey, you know what? We're not going to cut. We're sorry. We're ready to cut in January if we're wrong. But, we just think it's It's the safe move to pause. Again, I still think they will, but also I think they shouldn't. To that end, I read an article out from Apollo. Apollo is officially declared inflation is back on the rise. Yeah, that's not good. They actually warn of a 1970s rate cutting cycle a la Arthur Burns that will cause inflation to take off. They think that inflation could repeat the early 80s cycle. Again, remember, I think Paul Volcker came into power in 81, might have been late 80. And that's where Paul Volcker had to come in and rip rates higher because he had to declare who he was going to fight, the job market or inflation. And Paul Volcker chose inflation. Right now, again, folks, if you haven't downloaded the 54-year spreadsheet, go to my website, onerentalatatime.com. Please study 1978 to 1982. Look at rates, look at housing, look at unemployment, look at the misery index, look at stock performance. It's all on the sheet. And best of all, at the last tab lists all the data sources. So you can go back and check for yourself and realize that I didn't make this data up. It's all published. It's all for your, education. It's all for your understanding. So please go get it, download it, all of that. If you are part of my school community, I do have a surprise for you. We are going to do the 9 a.m. hub call live inside school. The hub call is unique because we get a mortgage broker, we get a real estate agent, and we get a contractor repair person, and you get myself, an investor. So you get a very unique collection of people talking, commiserating about what's going on in the market, in their business, and you will be able to ask all of us questions. If you want to ask Matt the mortgage guy some questions, he's there. If you want to ask Carlos some questions about estimates or repairs or what type of flooring to use or windows to use, he's there. You want to ask Ty about the market or creative financing, he's there. And if, of course, you want to ask me questions, I'll be there. So again, it was a surprise. We all agreed to it last night. So I put it in the calendar, 9 a.m. this morning, hub call. Get on it, enjoy, ask us some questions. And again, this is why the school platform is so unique. Not only can we provide all the education, the community, but we can go live and interact with all of you. We did get some economic data today. We got the S&P PMI reports for both manufacturing and services. Again, these are just kind of quick takes on what is going on in either the manufacturing or service sector. Again, it is very clear to me that manufacturing has been in a recession, likely for 18 months, maybe 2 years. The question is, will manufacturing come out of it? What are the numbers? Again, manufacturing last month was 49.7, so just below 50. 50 is the line between contraction and expansion. It was estimated to get slightly worse to 49.5. The actual, 48.3. So manufacturing is still struggling. But what about services? Let's be clear. Our economy, far more a services economy. Again, last month was 56.1. It was actually forecasted to get weaker to 55.8. Great news. It got better, 58.5. In fact, the composite PMI, that's where you merge both together, kind of giving you a feel for the entire economy. Last month was 54.9, again, above 50. That's what we want. We want above 50. We want a growing economy. Estimate was for 55.1, again, improving on last month. Actual, 56.6, again, better than expected. So again, these numbers are important. It gives us a little monthly taste of what is going on in either the manufacturing or services sector. So net economy doing better than expected. I do have a question for you. I don't know if this is true, but I read it this morning and I'm going to assume it's true, at least for this question. Most of you, if not all of you, know who Barbara Corcoran is. Obviously, she is famous for famous for growing the Corcoran Group, ultimately liquidating it, I think, for like $66 million. Good for her. She's obviously on Shark Tank. and she's being quoted as a real estate expert by lots of the media. But that's not my question. I just read an article this morning that Barbara Corcoran would rather fly coach than fly first class. In the article, Barbara says that a coach seat is roughly 25% cheaper than a first class seat. So I want to ask you, you're worth $20 million. Are you flying coach or are you flying first class? Let's assume the first class seat is 4x a coach seat. Let's assume no upgrades, none of those things. I just want to know, are you paying $4,000 for a first class seat, or are you flying coach for $1,000? Just leave a comment below, say coach or first. I just want to know what you are thinking. Yeah, I thought that was interesting. Barbara's likely worth 50 to 100 million, and she still would rather fly coach. So just thought that was cool. We did have a Sunday accountability call. Shout out Jared. Again, these are part of the value of the school community. We currently have 5 accountability groups. We have 3 overarching. Then we have 1 for the ladies of ORAT. We have 1 for real estate agents and brokers. Hopefully soon we will have an out-of-state and a short-term and midterm rental group. I'm looking for a couple of folks to run those. But yeah, hopefully those are coming. Yesterday, the Sunday accountability group talked about federal funds rate. They talked about DOGE, Department of Government Efficiency, economy, HELOCs, DSCR loans. They even talked drones in New Jersey. And of course, last thing, master limited partners. Again, folks, anything is open. You can come, you could join, ask questions, be a part of the community. Just keep moving forward. Let's talk about Tom Lee. We got to give Tom Lee his flowers. He will likely go down as the analyst who got 2024 right. Again, Tom Lee from Fundstrat was asked recently, what does he see for the S&P 500 in 2025? And again, hey, it's the guy that got it right in 24. Why not listen to him in 2025? He essentially thinks it will be the tale of 2 halves. Tom Lee sees the first half coming off the tailwinds of 2024 being, frankly, pretty good. Tom Lee sees the S&P 500 approaching, if not exceeding 7,000 by the summer, and then actually pulling back to something closer to 6,600 by the end of the year. Tom says it will be the tale of 2 halves, a strong first half with a pullback in the second. Tom Lee says he is watching a couple of things. He, too, is watching the Department of Government Efficiencies. He is watching animal spirits around deregulation. He is watching something he called longevity. He highlighted that millennials are the most obese generation. I do not know if that's true, but hey, I'm quoting Tom here. And he says that fact will lead to more drugs, more weight management, and yes, even some more surgeries. Lastly, Tom highlights that he is watching the rotation out of cash, out of risk-free money markets, into investments, right? There is a lot of capital on the sidelines. And Tom Lee gives Jeremy Siegel his flowers when he quoted him saying, Trump is the most pro-stock market president in history. Again, that is what Tom Lee is saying. Don't forget, folks, for my course, How to Get Started One Rental at a Time, I am running a December special. If you buy it, I will give you some free goodies. I will give you the 10-week free boot camp, and I will give you the replay of last year's Vegas event. So again, if you buy the course, I will get an email, and I will just log in and give you some free goodies. So let's close with Joseph Wang. Joseph Wang, the Fed guy, who's been on the channel many, many times. He is saying that the outlook for equities is looking poor. All right, Joseph, you've got my attention. Joseph Wang thinks a dovish Fed will likely cut much more than expected. That will have an impact on the dollar. That will have impact on companies, and that will have impact on stock prices. So again, we are in a very, very interesting moment. We have Joseph Wang out there saying that the Fed is going to cut more than expected, which could happen. I do think that risks, again, as we started this video, a return to Arthur Burns, not Paul Volcker. We have some folks out there talking about, like Nick Timiraos of the Wall Street Journal, saying that basically Jerome Powell is losing support for his rate cutting cycle. It's going to be interesting. Wednesday is going to be interesting. Again, I think the Fed will cut. I think the Fed should not cut. Those are two different things. But yes, here we are. And yeah, I think that's all I got for today. I got some other notes. I guess, you know what? I have a question. I want some links to videos or articles because I think some of you track this more than I do. MicroStrategies just bought another 15,350 Bitcoin for $1.5 billion. Took the total holdings at MicroStrategy to 439,000, which is roughly 2% of the 21 million that are ever available. I would love an article or a video explaining to me how MicroStrategies is kind of using debt to keep buying Bitcoin every week. Anybody out there have an article or a video? It does seem, again, I haven't dug into it yet, but it certainly seems like I'm going to issue debt. I'm going to buy more. The underlying asset goes up. I'm going to issue more debt, buy more. I mean, that works for a while, but does it work forever? I don't know. But again, I don't profess to know exactly what he's doing. But if you could send in a link in the comments below, or if you have my, my IG handle, or you're on X with me or whatever, send me some links. I'd like to dig into this and see if I can figure out what I'm missing. Because at the high level, it doesn't make sense. At least it doesn't make sense long term. It makes sense in the beginning, but when you start stacking these, you become the only one. And I'm not sure that ends well. So anyway, I admit my naiveness. I just like to learn more. I like to see what's going on. Don't forget, I own more than a whole coin. So hey, it goes up. It benefits me. So I'm not a hater. I'm just a guy who is looking to understand. Take care. Have fun. If you are in school and you're available, I know it's midday workday. We will be going live at 9 a.m. Pacific, noon Eastern. Come join the hub call. Come meet Matt, Ty, Carlos, and we'll have some fun. Later.